Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 7th. I'm going to take just a brief minute to discuss what markets did last week, as it was a down week in equity markets as the market and investors reacted to a weaker than expected jobs report that we got last Friday, with 73,000 jobs added versus an expectation of 100,000 added. And that really sent the market on a downward trajectory on Friday, but the market leading up to that was struggling to gain traction and move higher any further from that. But last week, the S&P 500 was down 2.36%. The mid-cap index was down 3.53%, and the small caps as measured by the S&P 600 were down 3.8%, so worse on the week. And the small caps still remain negative, and the mid-caps are just slightly, as of last Friday, negative for the year to date as well. And those smaller companies, again, are more economically sensitive, and when they see a slowing jobs number, investors weigh the impact of the slowing economy. And as we are getting Q2 earnings in, investors are looking past that and looking forward. So what we've seen is we've got 2/3 of the S&P 500 who have reported their earnings. Of the 2/3 that have reported, 80% have either met expectations or beat expectations on the bottom line. So for those who were saying the tariff impact was going to impact corporate earnings and you would see an earnings recession, well, we are not seeing that yet in the numbers as of Q2. But what investors are weighing is, as we go into Q3, Q4, as we start to get those earnings, are we going to see something different with the slowing jobs and the slowing economy? But one of the things that we look at here at River Place is the money flows and things along those lines. And what the market is telling us is those who have been calling for these recessions, those who have been calling for the earnings recessions and the slowdowns, this market has remained resilient, and this economy has remained incredibly resilient in the face of many things. And investors are believing in the overall health of the economy moving forward, that it's going to remain intact. And that's what you're seeing in the buy these dip type of mentalities in the market. You saw a very nice rebound day this Monday off of the backs of the sell-off the previous Friday. Off of the jobs number, immediate rebound. And it's been what you've seen so far in this market this year is the resiliency. Remember, we had the quickest recovery from your April sell-off to where we are today. Again, the smaller companies are going to lag behind, and value is lagging behind as well, as investors are weighing a growth slowdown for the overall economy. But what the market is telling us as a whole is it doesn't believe in any material, very big monumental slowdown in the economy. Otherwise, investors would not be putting their money into the market. So this is always the best gauge of how the economy is doing, or what's going on is kind of not always, they're not married together. So you can't look at the stock market to say what the economy is doing, because it's a forward-looking vehicle. With the slowing of the jobs, the market is betting that the Fed is going to cut interest rates, and more likely in September than what they had thought 2 weeks prior to that, when they had their meeting at the end of July. We get the week jobs report just 2 days later, and then that changes maybe what the Fed does in September when it comes to rates. And so the market is always looking ahead to that. So what we see throughout the course of this year is continued volatility. We may get a pullback. We are heading into a seasonally weak period, but what we have seen in this market is if there is any type of pullback, that it is quickly recovered and bought, and the market moves higher. So enjoy the ride higher and stay the course, stay steady through the volatility, and understand that the underlying economy remains pretty resilient and very strong. So if you have questions about how to navigate this market, or just ways in which we can help you in any way, we'd love the opportunity to speak to you. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much for watching.